They did a little announcement comes over. So July, get market, CL, crude oil, outrights, and then July. Okay, we'll go through the charts. Nasdaq, it didn't really sell off. Just kind of grinding higher. I'd like to see if we can get a little bit of a pullback. I'm leaving the 15-minute up just so you can see in perspective where we're at, although right now it occasionally happens, but you get the 15-minute and the 5-minute look pretty similar, you know, like where they are. But you could see how the 5-minute is starting, the red are up, the gold is starting to hook up, so it's getting more bullish. Crude is pretty quiet. Let's go through crudes a little bit longer term. The daily, you could see we've kind of been stuck in this range. 4 hour. Definitely looking range bound. There's the 15-minute. We cover the actually we'll first look at the US dollar. All right, I guess it's not gonna load. It's pretty slow. It's hard on rollover day. A lot of guys don't even trade it on oil. Gets a little squirrely. Is anyone trading Nasdaq or S&P? NQ, okay. So looking at the NASDAQ, you get a rally and then a pullback and a rally and a pullback and a rally and a pullback. The way I look at it is, into this pullback area now, it's definitely, and you'll feel it when you're trading with the trend versus against the trend. So it's definitely this morning back to the bulls in charge. It wouldn't shock me if it got up to 05, 02, another 12 points higher. Hopefully it doesn't blast and do it right here. But you could see that as these red bands start to come around, maybe it might print a new high and come back in. And you'd like to look for areas to buy there. Dow just printed an all-time high a little bit ago. S&P, NASDAQ, you're definitely getting a bearish. You could see the Dow's at a high, S&P at high, NASDAQ's not, Russell. So there's that's basically called a bearish divergence or lack of accumulation in the marketplace. They also use the advanced decline line for that. So it's showing that the indices are making new highs, but underlying stocks below it aren't necessarily making new highs. To me, it looks like just a normal pullback, though. I'm sure it'll start, especially you look at Euro and DAX. Oil seems to be getting, that pattern is a little more bearish, in my opinion. Gold and silver has been railing a lot lately. Copper for the, it seems like it was more dollar play than economy play. Grains are still down. Bonds are pretty heavy today. And then there's the dollar for the bounce. I'll actually just throw this chart in since it's better. Still looking pretty heavy. When you look at a year-long rally and then the pullback, kind of once it breaks that trend line, which is right here, it's definitely been more bearish. Looking at the week ahead on the calendar, tomorrow's housing, crude, obviously on Wednesday, crude inventories, and then the FMOC minutes, which lately have been a pretty big mover. I think in that case it'll probably be dovish because they're gonna, when they release the minutes from prior meetings, you start to hear what they were talking about, and the last meeting or so that was pretty much they're on hold on a rate hike this year. Initial claims and Philly Fed on Thursday. So Thursday's a pretty decent day. Friday is just CPI. So tomorrow and Thursday, Tuesday, Thursday are the big number days, and then we'll see on the Fed. Sometimes the Fed minutes are decent. All right, so see if we can get it down to the bottom of this red band. Everything's pretty flat. See if crude can get a decent bounce here. So you'll see on all these wicks on the candles. Oh shoot. Hello? Yeah, I hear that people lost the audio. Not sure why. It must have bumped it off. Sorry, I was talking about. Okay, no problem. I'll start over. Actually, I was talking about crude. Hold on. So what I was saying is that when you see all these wicks, that means that it's selling off, and then buyers come back and push it on and sells it off, and buyers come back in, sells off, buyers come back. This last candle was more bearish, but and that's a 15 minute. So when you think of time frames, like when you see me go and look at an hour, I mean an hourly chart is basically the day. Like when I think about when I'm looking at an hourly chart, um, I want to be able to kind of get a feel of where the day is going to go. To me, it looks like there's going to be an upward bias, but we've obviously had this pullback in the last hour. Then you go to the 15 minute to get you in your kind of area and spaces where you take an actionable trade, and then you get to the 5 minute where you actually execute your trade, or even, I mean, 1 minute is for really laser focused. We kind of have to, with crude oil being so strong, we have to, P&L wise. So oil, the higher time frames are up, the lower are down, so you can expect chop. NASDAQ, everything is starting to turn up. So once you see on a pullback, once the momentum of the market starts to hook up, usually you want to link multiple candles, bullish candles together. So if this candle, remember, it's an hourly chart. So if this hours ends up here, that's starting to show more distribution in this range. So we'll see now in the 15 minute if it comes back into that lower range. Typically all that back and forth noise that you see in the market is a lot of it has to do with short-term positioning. I just saw over the weekend some pretty large famous hedge funds are closing. One of them is a huge momentum fund that was part of Tiger, famous Julian Robinson. So the one of the Tiger funds is closing its doors, and they're heavily into momentum stocks. So what they have to do is liquidate their positions, and when they liquidate their positions, they definitely pressure the market. Because usually if they're long $1 billion worth of momentum stocks, and they're going to give cash back. Although a lot of times they they basically take the stock too. So see the price action on oil. God, everything is flat, flat, flat. It's kind of, as I say, that's no man's land. Like it can go down and test here. If you were looking to get shorted, it's already down from the overnight highs. It's a little bit better spot here though, looking on the shorter time frames, but I like to be patient on crude today with the rollover. We'll see. I'll get the NASDAQ. To 86.50. That recent low was 81. If any of the new people, are trading at all or want any questions about how to put stops in, limits, etc., let me know. So when you look on the NASDAQ, you almost can see how, you know, you get this type of movement, then it bounces right back, sells off, tests, and now this type of pattern here is somewhat similar to here, except the only difference, it didn't have this technical damage. So when I look at this here, this here, this here, this is the type of technical damage when you look at a chart, how it's driving the indicators down. At that point, the slope was down. And so the price action itself has really damaged the bulls till they're weaker. So when they go and buy and it doesn't work out, they just puke out and sell. And then you get some bulls that come in to buy in here and it rallies up a little bit. And the second it rolls over, they're like, okay, I sell and I'm out. And you get this kind of same movement. On the flip side, you would think if it broke down here that sellers will come out of the woodwork. But when it didn't, that's when you start to get this better price action and a stronger bull move. So now if we don't have a big sell-off like this here, then this price action in this area, as long as this holds, is much better. We'll even look at it in 1 minute, since it's already a slow summer day, it seems. So from a technical perspective, you just keep going and looking at those different patterns. It's really pattern recognition and taking in that information. So from a bearish perspective, failed double top. So now it really needs a hold in this area. If not, it pushes down to the pre-market. Sounds like everyone's up to speed on the ladder. Eduardo, how are you doing on the S&P? I think you can go to scalping today. So you could even go to a shorter time frame and start saying, you know, you might sell there, make your 2 ticks, maybe try and make a point. Not a lot of meat on the bone there. It's like a point. Basically, you're 18 to 19 half, so point. You could probably with the spread. Go back and look at bonds. Daily chart of bonds. That was that one spike day. Then we made the new highs in January and February. We've had this bigger sell-off. And then we've had this recent sell-off. To me, it's just hugely range bound. I don't see any cause for concern unless it broke below that 126 level, which I've watched for a while. I'll see if I can try and get the spread charts pulled up. I don't know if it's a new Java version or whatever, but it's been taking a while. Okay. Jerry, well, I'll just ask you offline, I guess, but if you're switching inside the app, that's why I will go to the minus 19,000 or whatever. You can't switch within the app. Which would be my guess is what's going on. And it says out of date Java. Oh well. On the automated systems, because of the crude rollover, I had it running in. It's pulling the data to make the bars in the June contract, and so we can't run it in crude. And then right now I have it on for the NASDAQ, but it's completely neutral. We should be able to get some trades triggered if we can get it down in this area. So when you look at the way automated systems are, you have to maintain a database, and then with that, like this is these charts are MetaTrader, so they maintain their database, but they spend millions on it, and actually probably 50 brokerage firms help pay for the cost and maintain it. So there's definitely a lot. There's definitely a lot there that keeps it going. For me, with running it for crude oil, you could run both separately, but I was running it as July or June, so it takes for a 5 minute, it takes about 3 hours of data to get back to in sync in line. Because if you look at it here, I'll pull this up. Well, I'll just leave it there. I'll go to June. Okay, June. Just do it on the ladder. So July is at 60.42, and June is at 59.70. So if you switched over the data feed, it would be off by about 75 cents, so it would screw up all your algos. Go back to July on this. See how crude kind of whimpered at the bottom here? Tried to break down, nothing there, and it's just now slowly drifting. It's not the best bottoming pattern in the world, but when I rank them, I would say obviously the double bottom or a retest of a low like here, and it doesn't even get close, and then once it takes out that level, you get a better rally. A lower low and then a higher low. It's pretty decent. That happened overnight or early this morning. Usually you also like to see the V bottom. The stronger the move off the low, the more strongly it can move. You know, typically if you get a little, trying to find a, have to move the data back, but that was the middle of the night, so it doesn't really count when the low volume is there. You know, where typically you get a bottoming candle, and then right away the next candle's bearish. That's where typically you get a weak rally. There's just not a lot of interest here at an all-time high, and then anyone who's been shorting has been blown out of the water, so it's hard to draw them out of the woodwork. Let's go and look at. I had just covered it up just to have that 15-minute, but we can look at the yen a little bit. It's been drifting higher, but it's still stuck in this huge range forever. Just super quiet. Kind of similar to the stock market. So this, like I said, this was the type of price action you want to see it tested that low it held versus when it broke down over here. Much more bullish. The lines are starting to hook up. Even the 15-minute, if it can start to flatten out, that's where you get a more powerful up move. First, look at, here's the 5-minute on NASDAQ, or you can even look at the S&P here, and then look at how, if you're looking to buy crude and see it rally up to here, you could see the difference. Down and down versus up and up. Let's see here. So here comes some buyers into that higher end of the range. Typically what I see is it blows off into that red band area. So up in here. Tough time of day though for it to just go off to the races. It also might be Apple because I just saw that Carl Icahn is asking for an increase in buyback or something. They have about 180 billion in cash. Well, most of it's offshore, but in cash. So you'd like to think they would do something with it. Not going to chase that. Kind of stuck up there in the range. See if we can get Some people had asked about an economic calendar. It's coming up very slowly. For some reason, it's not coming up. Must have changed the URL. I use the Yahoo calendar usually. Oh, there it is. Okay. So this actually gives other countries information too. So a lot of times that could be important for, like, you'll come in overnight and there's a move in Europe and you realize that there was one of the big ones is this in Germany, the zoo survey. Japan GDP is pretty good. The IFO survey in Germany. And the German, because of their heavy manufacturing, the German composite flash. Push higher to that top triangle in the red band. You could see how crude, once again, just that was it for the rally. Now it's back down. We'll see if it does a big crescendo now. Back down into this area, 58.5. Still doesn't seem like there's that many sellers that come out. You could even see how we've had, one big, huge down candle. This one's kind of, it's like 30, 40 cents, 10, 15 cents. So the downward momentum is waning, you can see here. Let's go back to this. So you can see how it hung out, and then this candle's only 17 minutes old, but it's already had that rally. So that keeps the upward movement intact as long as it makes a higher high. Crude is still kind of stuck here. Yeah, it seems like some people already have that calendar, so sort of slow news week, but Tuesday, Thursday are the two best days. Get some catalyst. Like I was saying last week, when you get an all-time high, you typically just kind of every day, every other day, press to a new high. I mean, obviously, just from the mechanics of it, people are not like, "Oh my God, I have to buy it. It's an all-time high." But there's definitely no overhead resistance, like I've talked about. So when you look at overhead resistance, I think crude would be probably a better. So people bought on this pullback. People bought here in this pullback. Because remember, usually on down candles, the volume actually picks up. So for every buyer, there's a seller. So people were buying in here, buying in here, buying in here. Sells off. Market rallies, they're getting back to where they bought. After it made a lower low, people are like, just get me out at break even. So if you think about it, it's like a shelf of sellers up here. Literally hits it, falls apart. So that's where you'll start to see when it tries to rally into that overhead supply, all the people that have bought now the second time around, it made a new low when it rallied back up into this overhead supply, if you think about it as a range. Anybody that bought in that range is selling. So you could see in this candle and this candle poked its head up into that range and it was rebuffed. It's until that the market can get enough energy to get behind it and break through that, chew through all that overhead, is when you start looking in buy zones. If they can buy and have enough energy to go through that, then that's a completely different change in the market. So for me, I'm looking at anywhere in that triangle area would be if you were long, you pretty much, that would be it. Buy range, once you get a breakout and then pullbacks, that's where you start to look in, to me, in this area. For longs, I would not be shorting. Now, a more aggressive trader might want to short, but I think it still has to show some type of weakness. Where it touches a level and sells off right away. See how your slowly chipping back, Eduardo. You could see we're in that same area on the 15-minute and the 5-minute. Let's go to a 30-minute. There's the 15-minute. 1 hour. We'll see on crude. I'm going to pull up that tick range chart. Let me just expand it out. So this is why when I look at a tick range chart, the oscillators and some of the things, because it's actually not very prevalent. This is on T4. I've seen very few other trading platforms with it. So whatever you choose, I choose the properties. It's a 8-tick range, so it's 2 points. So every candle is 2 points high. That's why it kind of looks a little blocky, because every time it goes, if the candle opens here, down ticks, rallies, and once it fills in that 2-point range, it starts making a new candle. So it's all price action. There's no time involved, although they do put time when those candles actually change over, but you can get something in a very choppy range and it doesn't do much. But you can see we were in the same area, but you can see the stochastics, which work occasionally nowadays because it's been around for so long, 30 plus years. So when you look at this, same price, vastly higher. Thus it shows a bullish divergence. That's the most clear-cut bullish divergence you'll see. Let me pull up. So look at here, the same price action. It's actually almost a bearish divergence. It actually was a bearish divergence. So it's a lower low. So you can see how having multiple different tools to look at this is definitely a thing to help you. Let's look at it in crude. I know I have a crude. crude tick range. So we're drifting lower. It's kind of hard when the stochastics are pretty much pinned at 0. But if we could take out this area, that could be definitely more bullish. You could just see that its downward momentum is fading. So this is a 20 tick range. So we just had it jumped up and it just made it a new candle. Definitely shows buyers in there. But it's a pretty interesting tool. You right click, you go to properties, and then bar interval, you go click here, it's tick range. I do 20 on crude, 8 on NASDAQ. Probably could do 8 on S&P too. It's 2 points. Pretty handy tool from T4. Just leave it over there. So rest of the day, I had a midpoint 87. Could probably see it closing somewhere around 44.90. Although all-time high almost on S&P and Dow, so you might get a big short squeeze. Look to buy dips. What you'll see is even with the S&P going up, the correlation starts to drag the crude oil up too. So crude could definitely bounce. So if I see anything, I'm looking to buy pullbacks on the NASDAQ, and if I see anything, I'll jump in the room. I'm also I'll be working with a couple different people just to get their server set up. So we'll see on your wrap up, Paul, and like I said, if I have anything, I'll yell it out in the room. Thanks a lot.